Hello, welcome to the European Open briefing for Wednesday, May the 23rd. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So we've got quite a bit of risk-off sentiment this morning. The dollar is down against the yen, but is mostly up against other majors. So the current deterioration in risk-off came after President Trump cast doubt about whether or not the summit with North Korea would go ahead, and he was also not very pleased about how the trade talks with China were progressing. Despite that, the euro and the pound continue to remain under pressure against the US currency. The euro has fallen to fresh lows following a PMI miss, following today's flash eurozone PMI indicators. The pound is down ahead of UK inflation numbers. Oil prices are also lower as OPEC considers whether or not to ease these supply restrictions. Let's get started now with the US dollar. We can see dollar yen falling significantly lower from those highs, 4 months highs on Monday when it broke above the 111 level. It is now trading around 110.30. The dollar index, though, is up this morning as both the euro and the pound are down against the dollar. In fact, the dollar index is moving closer to Monday's 5 months peak above the 94 level. It's currently trading around 93.80. US Treasury yields are also retreating this morning. The 10-year yield is down to 3.03%, as we're seeing a significant rise in risk aversion. So President Trump has said he's not very happy about how the trade talks with China were going. He also said that there's a substantial chance that the summit with North Korea on June the 12th will not go ahead. So that's led to quite a bit of risk-off in Asian trading this morning, with equities, global Asian stocks down. We also saw major indices in the US give up earlier gains to close mostly lower. The focus later on, though, will move on to the FOMC minutes of the May policy meeting. They will be published at 18 hours GMT. Let's now turn to safe haven assets. The yen, we can see, is up against both the euro and the pound by around 1%. The Aussie and the Kiwi are down by even greater percent against the yen. So the yen is the main beneficiary of the latest risk-off. If you look at gold prices, they're not really up by much. They're slightly higher at around $1,292 an ounce. Though if we do see further deterioration in risk-off, especially if the North Korean summit gets cancelled, we could see gold make some more substantial gains. Let's now turn to European currencies. We can see sharp falls there for the euro and the pound. We just had the Eurozone flash PMIs for May. The composite PMI, which includes both the services and manufacturing sectors, plunged to an 18-month low in May. So this means that the Eurozone economy continues to slow down as we head into the second quarter with no rebound inside. And we're seeing the euro dive to 6-month low of 1.17 $17, a fresh low for 2018. A pound is also under pressure. At the moment, it's trading around 1.3373. That's a near 5 months low. It did get a bit of a lift yesterday after the Bank of England policymakers at a parliamentary hearing signaled that interest rates will likely go up further later this year. But the investors weren't too convinced by that, given the recent shift in policy. When 1 minute they were strongly signaling a rate hike for the May meeting, then they later backtracked on that. We do have UK inflation numbers coming up shortly. Perhaps that could provide sterling with a lift if they come in above expectations. There's going to be more UK data to watch out for this week. We also have retail sales numbers tomorrow and second GDP readings due on Friday. A quick look at the Australian and New Zealand dollars, because both currencies seem to be reversing yesterday's strong gains. The Aussie had rallied to just above the 0.76 level to 1 month's high, but the risk-off has has put the Aussie under pressure. It has now fallen to around 0.7530. A similar story for the New Zealand dollar. Yesterday it was up at a one and a half week high of 0.6974. It has now crossed below the 0.69 dollar level. The Kiwi came under additional pressure following a research paper published by the Reserve Bank of New Zealand, where the central bank was looking at options for unconventional policy measures should there be another crisis, and where it said that the AUDNZD would consider lowering rates to negative territory, as well as buying government bonds. So that also created some downside pressure for the Kiwi, although that is just it's only a research paper, it's not actual policy consideration, and this was confirmed by RBNZ Assistant Governor John McDermott in his remarks, though the Kiwi, though, is mainly being affected by that risk-off this morning. Both the Aussie and the Kiwi are down by around 0.6% against the US dollar. And finally, let's have a look at oil prices. We can see both Brent crude and WTI moving down this morning. WTI had risen to a fresh 3.5-year high yesterday. It's now fallen back below the $72 a barrel level. Brent crude came close to making a fresh high yesterday above $80. It's now trading just below the $79 level. So the latest the reports say that OPEC is considering raising output in order to offset potential disruptions to supply should the US go ahead and impose sanctions on Iran and Venezuela. We've got a meeting, OPEC and non-OPEC meeting coming up in June, so we could see a decision as early as next month. And if those the rumors do materialize, we could see oil prices coming under further pressure. We also had the oil inventories out of the US yesterday, where we saw smaller than expected drawdown in US crude stocks. That's according to the API weekly report. The official numbers, which have more impact on the markets, are expected later today. And quick look at today's economic calendar. We can see the PMI numbers out already. It's going to be a busy day for data. We've got UK inflation numbers coming up later, as well as US home sales and the US manufacturing market PMI, as well as consumer confidence survey for the Eurozone. That's it from me. Thank you very much for watching, and have a great day.